Hi, and welcome to this episode of the Midday Market Update. It's October 6, 2020. My name's Kevin Hill, and as always, I'm here with Michael Vincent.
Hey, welcome everybody. It's a live interactive show, so get your questions and comments in. We're on, what are we on? We're on LinkedIn, we're on Facebook, so get your comments and questions in. We'll get them addressed as best we can or answer those questions. Yeah. We've got a great show again today, huh?
We have a fantastic show. We have the biggest nuclear verdict ever that just came out on FreightWaves.com. And
Wow.
We'll have John Kingston on in just a second, but first, a word from our sponsor here. Thanks to our sponsor here, Amazon Freight. Freight moves fast, and you need a shipping partner that can handle what's in front of you while also planning for the future. Amazon Freight has opened up their network to enable shippers of all sizes the ability to simplify, optimize, and invent. Tap into the expertise of Amazon with a freight partner that is here to help you navigate the road ahead. Discover what's next at freight.amazon.com.
That's right. Go there directly after the show.
Definitely do that directly,
right?
Directly after the show.
So who we got? John Kingston. Is he still at large, huh?
He's still at large. Yeah, it's our editor at large, John Kingston. He just broke a story on FreightWaves.com. It's the head story in our newsletter that's going out right now. And if you're not a subscriber to the FreightWaves.com noon newsletter, go to FreightWaves.com right now and sign up. It's right there on the front page. You can subscribe to our daily newsletter. So, but yeah, it's the biggest nuclear verdict of all time. And we'll have John Kingston.
Yeah, pretty crazy story, right?
It is. And let's bring on John right now to talk about that.
Hey,
there he
guys.
is. Hey, John, how are you, man?
Very good, very good.
So
Awesome.
tell us about this.
So here are the facts. It's a $411 million verdict. It was handed down after a trial that was all done by Zoom, all the testimony and the jury deliberation. So that's a whole other story. It was in Florida in Leon County, which is where Tallahassee is. And it comes out of an accident, a 45 car or 45 vehicle pileup back in 2018. This seems to be the only litigation, though, that came out of this. It was a motorcycle driver who ended up trying to avoid things by going on the median, slammed into another truck, and they filed suit against the truck that jackknifed to start the whole sequence of events that led to the accident. Here's what you need to know about the company. The company is called, but I didn't put it in front of me, Top
Auto Express. Top Auto Express.
It holds a grand total of one tractor. It appears to have lost its authority. It has now a $400 million verdict against it, which is obviously completely uncollectible. They did offer to settle for $1 million. The expectation is or the assumption is on the part of some of the attorneys I spoke to is that was their insurer who gave them the top number and just then walked away from it. The attorney that the company had to represent them also, I don't know if they walked away or they were let go, but the owner of this company defended himself at trial and obviously didn't do too well. So, if you're going to have a $400 million verdict against an individual owner of a tractor trailer, why not make it $411 billion while you're at it? That sounds really good. The number represents nothing as far as I can tell. It's not even $411 million even. It's like $400,620,317. It's just crazy.
It seems like this, John. It seems like this. All of these events, it has to be Florida. Right? I don't imagine all these events coming out of any other states except for Florida. You have a Zoom call. You have owner-operator who had to defend himself in court. And, a Zoom meeting for trial. Like this is insane. And $411 million.
It's absolutely crazy. And you said, John, the interesting thing, there's so much interesting stuff here, so much to unpack here, including the sequence of events for this accident. The motorcycle didn't even hit this tractor, right? There were 45 car pileup, and this is the only litigation that came out of the accident. Is that right, John?
Yeah, apparently based on some things I've been reading. And, it'd be one thing if they went after, if this was, a major truckload carrier or a major LTL company that jackknifed and caused this reaction. But if they were going after somebody with deep pockets, they didn't hit a very good target. Maybe there was some deeper pockets there because he was carrying liability of $1 million than the other truck he hit. We don't even know, based from what I've read, what the size of that other truck is that he hit. But maybe they thought that the trucking company had some deep pockets, and the pockets only extended down $1 million, and after that, there's nothing there. I tried to call the trucking company. I had two separate numbers. There's no answer. I left a message. Kevin, you were the one that found the PHMSA record that showed their authority was no longer valid. So, but these things, even if the amount of money that's going to change hands is it's a joke compared to the verdict. It's in the body of law here, and every time you get one of these, it could have some ripple effects down the line in other litigation. So it's crazy, but it's not nothing.
Wow.
So Stephen Stotts.
Go ahead.
Stephen Stotts, a truck driver at Special Event Transportation, says, look at the billboards in Florida. Every other one is bragging about how much they can get you.
Oh yeah. Have an accident with a commercial vehicle? Give us a call. We'll get you the money. So the ridiculous nature of this, and it definitely appears to be completely ridiculous, John. As you put this, the motorcycle driver came upon this pileup of cars, was swerving to get into the median, and hit another truck, just defined as truck, that didn't have any lights on. And then sues the truck that's 45 vehicles ahead of that one, or 44 vehicles ahead of that one. But this is going to stand unless somebody appeals or something, and they're not going to do that, I guess, right?
Well, who's going to appeal? I mean, the owner of the truck company, well, we don't even know who that is. They don't have an authority. Presumably, they don't have any money. So, appeal and what? Okay, it gets cut down to $100 million on appeal. So what? They still can't pay it.
Yeah.
And you can't pay the attorney's fee to file the appeal and fight the case, probably, right? So it'd be $100 million plus attorney fees after that part.
Yeah, I get the sense from looking at the page of the defendant's attorney, a guy named Ben Crump, that he looks like maybe a little bit of a showboater. His webpage is maybe a little bit more snazzy than it's snazzy and functional, but maybe a little more snazzy than you would expect to see for an attorney's page. And but hey, you know what? I think the bigger precedence here might be the whole question of, can you truly litigate something like that in Zoom? And if I was a plaintiff's attorney, I'd probably be more interested in that aspect of it than the award, which the award is important, but as we know, it's not going to be collected. I have to laugh, because I've been writing about the Louisiana staged accident case, and that's going to blow one of these days too, with the attorneys and other organizers of these staged accidents. There's going to be indictments coming down. Well, I don't think anybody staged a 45-car pileup. I mean, that'd be rather tough to do. So, I'm sure this was chaotic, and apparently, the defendant does sound like he suffered some really serious injuries here. So, our thoughts to him. But as far as a legal case, I don't know what kind of precedence this sets in terms of size, but I think it probably set some precedence in terms of venue, being on Zoom, and my guess is attorneys are a little more interested in that right now than they are the outcome.
I would think so. I don't think it's probably going to set any precedence, really.
Yeah, I hope it doesn't. So
it's a wild case.
So Crump is the attorney for Washington, the guy who hit the truck. He's correct. For the plaintiff.
Yes.
Yeah.
His quote is interesting too. This is a significant historic ruling for justice.
Yeah, I mean, if you go on his webpage, the word justice is there a lot.
He probably has a billboard.
Oh, he's got a billboard.
Well, I don't know, but he probably does. It seems like he probably would. Before we let you go, John, you also originally you'd come on to talk about a fraud case in a driving school. Really quickly, what do you have on that?
Just wanton hubris. There's no other way to describe it. There was a GI type bill coming out of 9/11 after 9/11 to train veterans. And so these guys who ran a trucking company put in for all these grants to train veterans. They also got housing allowances with them, which looks like they kicked over to the veterans. The veterans signed up, but were told, don't worry, don't even bother to come to class. We'll give you the housing allowance that you were going to get. So that was their payoff. And then these other guys took, a total of about $4 million, including the housing allowances, two guys, one of whom then flipped and testified against the other. The first one was sentenced the other day to 48 months. This is in California, in the San Fernando Valley, about maybe 35 miles out of downtown LA. Even already, like on the PPP program, there've been some indictments, and these people who just applied for government money with no intention of ever spending and on what it was supposed to be allocated for. They just said, I'll put it in my pocket and I hope I'll get away with this. Same thing here. And this went on for about 4 years. And they collected several $1 million, which they spent on all sorts of wonderful presents for themselves, and sent some money over to the veterans, not really sure how much. And the first guy's been sentenced. He pleaded guilty like a year ago, and then with COVID and some other things, that was delayed a year. And then the other guy has also pleaded guilty, but he's not getting sentenced until next spring. And you assume that he'd probably get at least 4 years as well, because there's nobody left to rat out unless. I'm just wondering here if they maybe made a deal with some of the veterans. Show us the proof, pay some restitution, and we'll go after the big fish.
Yeah, that's what it appears to be, right? Because the veterans obviously were knowingly in a scheme, I would imagine, right?
Yeah.
Sign this, I'll send you some money. Don't worry about it. Wow.
That's the most of it right there. Well, thank you very much, John, for coming on today and sharing the nuclear verdict and also the fraud case with the driver training school.
Okay, thank you guys for having me.
Thanks, John. Wow,
Now,
crazy stuff. Two crazy things right there.
It is.
Right?
But both of them are crazy. The Florida case is mind-blowing sometimes. So if you haven't read it yet, it has packed full of details. It's on FreightWaves.com. And if you're not a subscriber to our newsletter, you can do that at FreightWaves.com as well. The rest of the headlines, let's talk a little bit about XPO and whether they're seeking to break up again or.
Yeah, let's give
what
it
they're doing with Andrew Cox over here.
Yeah, Kevin, Bloomberg reported over the weekend that XPO and Bradley Jacobs are courting some offers, putting out some feelers for its European supply chain business. Should a deal move forward, it could restart Jacobs' plan to trim the company down to a pure-play LTL player. In January, we heard that Jacobs' objective was to dramatically boost the company's value, which he believed was compressed by a conglomerate discount. But that plan was kind of shelved in March when the coronavirus hit the U.S. The business unit being shopped around is French-based contract logistics business, which accounts for most of XPO's European exposure. In 2019, the unit generated $4.7 billion in revenue, but more importantly to its valuation, it brought in $290 million in EBITDA. Currently, reports are saying that the unit could fetch between $4 and $4.5 billion, which would give it a multiple of roughly 15 times EBITDA. And this deal would be highly accretive to XPO. And experts on the situation believe that XPO would jump at that offer in a heartbeat. But more importantly to Jacobs and to XPO investors is that a deal at that type of multiple would force investors to revalue all of XPO's business units, creating a rising tide lift all boats scenario for the company.
So what's the motivation there? I mean, I get the valuation play, but once the valuation is up, Kevin or Andrew, I suppose, what is the play there? Selling these units for what? To get that valuation up and then buy others, or just get the valuation up to improve the stock price?
Well, it seems first off to be a valuation play. Jacob said at an industry conference last month that his first choice would not be to sell the business units. But he never really killed the idea. In March, it simply said that they were going to focus on other things. And he has emphasized long-term for a long time that his mission is to drive shareholder value, not create an empire. He reiterated that XPO shares are highly undervalued by Wall Street. He knows that Wall Street likes a simple story. They like pure plays. And really, they don't fully understand all of XPO's moving parts through the roll-up strategy that they've implemented since Brad Jacobs became chairman and CEO. They've become a complex organization with multiple business units in multiple continents. Currently, XPO shares are valued roughly at 10 times EBITDA, which compared to the best-in-class pure-play LTL players like Old Dominion is much less. They trade at roughly 18 to 20 times. Analysts have estimated that if XPO were able to kind of sell off these 4 business units, it could add between $30 and $60 per share to the company. And the market has reacted very positively to the news over the weekend. In the 2 trading days since the news broke, XPO shares are up roughly 10%. So you have to think if they're able to do this, Jacobs could go for more expansion into LTL and become really a huge LTL player. But their plan right now is to try to trim down, or their plan was to trim down. We'll see if that plan continues here into the new year.
Yeah, and it shouldn't be too surprising that the stock has traded higher on this news. We know back in before COVID earlier this year, there was an announcement of selling off selling off units and leaving just the LTL, and the stock price responded very, very nicely to that as well. So we'll see how that goes, and it sounds like that original plan is eking back in now that things have. The world is kind of stabilized right now. So while XPO is trying to divest maybe, Forward Air looks to be purchasing more assets.
Yeah, Kevin, Forward Air continues to make acquisitions and add new service offerings to their portfolio. This time, the Greenville-based Tennessee trucking company has added an intermodal drayage player in Value Logistics. Founded in 1996, Value Logistics is headquartered in Memphis, has roughly 20 employees and 30 independent contractors who generate nearly $6 million in annual revenue. This deal is going to be valued at about $2.25 million. It will be funded by cash, and it should close before the end of the month. In September, Forward Air added a final mile provider in CLW delivery for $5.5 million. This all comes on a second quarter announcement by CEO Tom Schmidt that the company would take a no-wait approach to expansion. So we could see more from Forward Air, whether it be new service offerings by the end of the year or some more efforts in the M&A department.
Yeah, they're expanding quickly and bringing on new services as it states. They brought in the LTL too, right? Earlier in the year.
They did. They added that back in July.
And the final mile, and now they're going after drayage. A lot of expansion. I wonder what's next for these guys. It'd be interesting to see.
Certainly.
It definitely would. So yeah, Andrew, Port of Beirut, we have a development on that situation too, don't we?
Yeah, Kevin, arrest warrants have been issued for not only the Russian captain, but also the owner of the vessel that carried the ammonium nitrate that has believed to create the massive explosion at the Port of Beirut. Al Jazeera noted that the final tally was 193 dead, 6,500 wounded, and over 300,000 left homeless as a result of the August 4 blast. The blast was blamed on 2,700 tons of ammonium nitrate that had been stored at a Port of Beirut warehouse. That ammonium nitrate, which is used as an agricultural fertilizer, was destined for Mozambique back in 2013, but the MV Rosis stopped at the Port of Beirut because of what it called financial difficulties, and the ship never left the port. After the ship was abandoned, the cargo was transferred from the ship to a Port of Beirut warehouse, but then soon thereafter, in the years since, that boat completely sank. They lost a boat into the Port of Beirut. Lebanon's national news agency reported that warrants have been issued for Bruiz Prokashev, captain of the Rosis, when it was docked in Beirut, and ship owner Igor Grechushkin, a Russian businessman supposedly living in Cyprus. The national news agency also reported in the days following the catastrophic event that some 24 individuals, including port authorities and customs officials, were placed under house arrest as the investigation continued. CNN eventually said that the document suggested multiple government agencies in Lebanon knew the dangerous chemical was being stored in the warehouse and may have failed to safeguard it. So we could see multiple people from multiple agencies brought to justice here, and we could even maybe see an international manhunt trying to track down some of these Russian businessmen.
Wow. I wonder if there's any extradition types of things. I think one of the suspects, or I think the ship owner, lives in Cyprus now. Isn't that right, Andrew?
Yes, Kevin, he does live in Cyprus. I have no idea what the extradition laws are for Cyprus, or it is in the EU, so maybe they do work a little bit more on European law for extradition, but I have no clue.
Sounds like some of these government officials and port officials need to be questioned a little bit more. You had all of these tons of this nitrate sitting there for 7 years.
Yeah. 7 years.
For 7 years, and they couldn't figure out what to do with it.
Yeah, I get whether the ship sunk in the meantime between. Yeah. But between the time it was offloaded and the explosion.
I mean, 7 years abandoned freight. I forget what the laws are, and was in LTL when I was there, but it was certainly not 7 years.
It certainly was, or was not, I should say. What's our final headline here, Andrew?
So I don't have any further headlines for you.
don't?
I had one thing to add on that. If just to give you a little context on that massive blast, 2,700 tons of ammonium nitrate. The tragic blast that happened at the Oklahoma City bombing, I believe it was only 2 tons of ammonium nitrate used there. So you can get kind of an idea for the type of blast. And again, you're right, the exact type of idea that we should be going after maybe some of those port authorities, knowing that they had that much of an exploding chemical sitting right there in their warehouses for almost a decade.
Yeah, I mean, absolutely. You've got to recognize these things. This is not a hard thing to recognize as being dangerous for 7 years, just sitting
For
there.
7 years, and if you've seen the video online, it is a massive explosion.
Yeah.
I know. So an announcement here. A recent Forbes article, I think it came out today.
Oh, okay, great.
It lists FreightWaves as on the 25 small business survivors and thrivers here.
Amen.
So,
hey, proud to be part of that team, man.
A pat on your back there. Yes, a fist
There you
bump.
go.
Definitely.
Fist bump.
So that's
that's
really
tremendous.
good news, and I haven't had a chance to read the article myself, but I will definitely do it once we get off the show here.
Yeah, no, we've been up here. No, that is tremendous news to be out there, man. Congratulations to Craig Fuller and everybody on the team, man. It's been a great ride for the last almost 4 years for me.
Yeah, for 4 years. Yeah,
Yeah.
year and a half for me.
There you go.
Yeah. So let's turn to the freight markets like we do in every episode with Zach Strickland, our Director of Freight Market Intelligence here. What's going on in the freight markets today?
Hey, Kevin. So yeah, the freight markets are still very active. It's still we're still in a very busy cycle. We don't anticipate that is going to end anytime soon. But right now we're seeing a lot of strength in the reefer market. Reefer demand itself is starting to really turn on. Entering October and November, a lot of people don't realize that this is actually not that out of season for the reefer markets. We do tend to see a lot of reefer activity as we get into more manufactured or produced foods. It's not necessarily a lot of the fresh produce that we see moving in the summer months, the warmer months when you have Florida and also Southern California, Northern California really active due to a lot of the surging produce movements. The Northwest does have a couple of produce movements, that occur throughout September and October. Of course, apple season, the apple harvest is a big deal. But again, a lot of this food is getting ready for, we have a higher increased demand for a lot of the food products that are going throughout the country, thanks to Thanksgiving and a lot more internal gatherings and things like that. So, a lot of this stuff is just getting a lot of these supplies in place, getting ready again as we enter some colder months. People getting together.
Yeah, so we were so on FreightWaves now we were going through a lot of the through where we're at right now with the outbound tender volume sitting at 15. Let me see, I can pull it up right here, but it's sitting at 15. Almost 16.
Yeah, almost
right?
16,
And
yes.
it's kind of been. I would call it. It is not stalled, but it's fairly leveled off right now. Yet you still see the outbound tender rejects rising, and refrigerated is almost one and two loads being rejected. And then the van is 1 and 4, and I believe we're going through through the flatbed as well, Zach. I don't know if you can speak to that.
Yeah, flatbed is also pretty active itself, but it is still very muted compared to reefer. Flatbed is still not seeing a lot of the volatility that we saw in the other two modes, specifically reefer. Reefer's been very active this year. Early in March, that was one of the strongest reefer demand cycles of the year when we had a lot of those consumer products really turning on.
Yeah, it's a pretty steep rise, but it's been continuing for quite a long time, and it obviously there's other repercussions that are there as well, Zach. I mean, you and I together in our former life, we used a lot of refrigerated for backhauls back to the West Coast, right? And it was non-refrigerated commodities. That starts to add pressure as well, does it not?
Yeah, so basically now that they're rejecting, you and I both experienced this, now the reefer carriers have other options out there to haul more reefer specialized freight. So now that leads to lower capacity for the, a lot of the shippers out there that may have been taking advantage of a rate, again, like you said, a backhaul rate that's not necessarily as conducive to making money. They're simply just trying to fill a need to keep that truck moving versus now they have some actual reefer freight that is going to pay 3 to 4 times what that van freight backhaul rate would. So, yeah, there's a lot going on there. I mean, not all this freight necessarily needs to be refrigerated.
Yeah, there's a lot going on in the market, and that leads me to wonder, I'm always interested in where are contract rates going from here, Zach?
Yeah, and kudos to you for giving me the idea on this last week's Chart of the Week with that nice clicky title and everything. I wrote this article thinking, it is that time of year. We get a lot of bids coming through the pipeline, and we've heard, of course, constantly about all these mini bids as shippers are really trying to just get as much capacity as possible and take advantage of as much of this revenue as they can in what has been a very challenging year. So yeah, I did a quick little high-level analysis comparing our outbound tender rejection index change and what it's done to the contracted rates using things like the Cass truckload line haul index and the PPI for long distance truckload. And comparing those two items, which I know needs a little bit more detail behind it to do a really pure comparison, it looks like, things are set up to be what looks like about a 4 to 6% rate increase if all things remain the same. And again, this year still has a lot of time left in it, depending on when those bids come out. The difference here is, I don't think people are quite as bullish for 2021 as they were, in the freight market in 2017, 2018, when a lot of the rates that I based that comparison on, they had a lot of things behind it, such as ELDs. Of course, we hadn't seen this kind of economic growth in a long time, so everybody was just thinking, well, this has got no reason to slow down. Whereas in the COVID-19 world, you both know nothing is really guaranteed. So there's a little bit more uncertainty involved in 2021, but if we just did a straight comparison using those numbers, it looks like they should be expecting anywhere from a 4 to 6% rate increase this season's bids.
Interesting. Zach, we were talking earlier, maybe it was on another show, but we were talking about the two sides of the coin here in 2020, where we saw rates just plummet, right? And you saw, they wanted regulation. Carriers wanted regulation because the floor was just dropping out of the rates. Obviously, you remember that, Kevin. And now yes, rates are really high and gone up. And we've seen all this talk through our different virtual events and around from industry leaders about transparency and collaboration, et cetera. And I'm wondering if, because those two extremes occurred so close together, will that moderate some of the up or down in the contract rates going into next year? As you well know, Zach, when you're in a position to demand as a carrier higher contracted rates, you run into the issue of losing that business if there were to be a drop in spot rates, right? Your shipper is going to go and save that 10, 15 cents a mile or 5 cents a mile or whatever. And the reverse also happens. So do you think that will mitigate any of these contracts that are going forward, or have you been hearing anything as you collaborate with a lot of shippers and carriers outside of the shows?
Yeah, I mean, a lot of the shippers are very aware that they are entering we're in this unprecedented peak market as bid season rolls out. And so a lot of them have done these mini bids, where they're basically saying, okay, let's just call it a 3-month cycle. We'll raise your rates for 3 months, sort of out of cycle. We'll get to a more long-term contract when this kind of settles out in 2021. You and I both know that's a very costly type of adjustment to make, especially for some of these larger shippers. But the fact is that they just can't get capacity right now. And I do think that since we did have this huge pendulum swing in a very short period of time, that's going to keep some of the carriers out there a little bit more conservative on some of these rate increases. I would think by nature it would have to be. But again, we all kind of see those dollar signs. I was no different when I was pricing them. Sometimes you get a little bit excited about that current environment that you're in. You're always kind of going to value the current situation a little bit more than you would, any kind of anticipated. Because again, there's still some supply side issues sitting out there on the carrier side, increasing costs due to driver recruitment issues, all sorts of other things that are happening that are going to actually increase the rate without the help of this, high level of demand as well.
Yeah, it's interesting that you mentioned that you tend to focus on the current environment that you're in, Kevin. And when you're looking at the fourth quarter, it's typically a little bit more depressed rates, right? And it's right into the traditional bid season, right? Usually follows the calendar year. Maybe this event, it does moderate that a little bit, and people look towards more of these, like you said, almost like a contracted yearly bid that maybe has seasonality built into it, right? To kind of protect both sides. I don't know if you're seeing that, Zach, or what your thoughts are on that.
Yeah, I think it's a great move if you can do it and pull it off. But at the same time, it's only a patch on a situation.
Yeah.
What if we go into 2021 and demand is still extraordinarily high? We've already seen that the economic recovery has been very divergent in the way that services, which are 70% of the overall GDP, according to Anthony Smith, who we'll hear from here in a bit, but have really not recovered at the same rate as some of these durable goods and the durable good manufacturing, the consumer products, the retail has really been strong here in the last several months. And a lot of these are big ticket items, these OEMs for things like jet skis and, boats and all sorts of, motorcycles and things like that. They're in backlog into 2021. So there's still a lot of legs underneath this that could keep things elevated throughout the, into the next year.
We'll see how the freight markets go from here. It's going to be an interesting fourth quarter. We're 6 days into it now.
Yes, 6 whole days.
It's not disappointing. Thank you very much for that, Zach.
Thanks, Zach.
And a new segment that we're doing here on Midday Market Update, we're going to check in on the weather with Nick Austin.
Yeah, we got some interesting weather
meteorologist.
possibly coming our way. Right?
I know, yet another hurricane, right, Nick?
Yeah.
You bet. We're already into the Greek letters because we ran out of the regular names. That's how many named storms we've had this year. So it's been one of those years. We've had a lot of landfalls, and this is Hurricane Delta. And folks along the northern Gulf Coast, especially in Louisiana, unfortunately, they need to really be paying attention to this one because this exploded from a tropical storm yesterday. Now it's a Category 4 hurricane. It won't be that strong when it hits Louisiana, but it'll still be pretty strong. And it's got to move through the Caribbean and the Gulf of Mexico first. But probably on Friday sometime is when it may end up hitting Louisiana. So it's going to be a pretty big deal again across the Gulf Coast. With a lot of disruptions there.
So it's expecting to weaken as it crosses the Gulf into Louisiana. What category is it forecasted?
Yeah, it could hit the coast as a Category 2. So it still could be pretty strong, even though it is going to weaken along the way. But that doesn't mean that it's not going to cause problems. Category 2 storm can cause a lot of issues. The only kind of silver lining is that even though it will slow down a bit once it makes landfall, it's still going to be moving fairly quickly. It's not going to just stick around that region and just stall there for 2, 3, or 4 days. So at least there won't be that major long-term flooding. But there will be a lot of coastal flooding, storm surge, heavy rain, some wind damage, power outages, all that kind of stuff. But so far, I haven't seen that the U.S. Coast Guard has shut down any ports in that region, but I bet you they will start doing that probably maybe sometime later tonight or tomorrow. They'll start to at least suspend some ship-to-shore operations at some of the ports. And there'll be problems on the roads, just, the normal wind damage with roadblocks, with flooding and trees and power lines down and all that kind of stuff. So, and, if we want to bring up the critical events in sonar, I can just pop up the path real quick. It's going to hit part of Mexico first before it hits the United States. It's going to hit the Yucatan Peninsula, including the Cancun area, probably during the day tomorrow. And so there's going to be a lot of flooding and damage there. And then it'll hit the Gulf Coast, probably in Louisiana is where it'll probably make landfall on Friday. So it looks like there could be a pretty good amount of flooding in the New Orleans metro area, possibly over to Mobile as well. But, the thing with these hurricanes is you have to watch them every day because if the track shifts just a little bit one way or the other, it changes the whole picture. So we just have to kind of keep our eye on it all through the week.
Yeah, I guess the good thing is it's expected to weaken, not hit as a Cat 4 or strengthen over the Gulf.
Correct.
And it's moving fairly quickly, so the rain event shouldn't be. It'll be absolutely a factor. I'm not trying to downplay it at all, but it wouldn't not as bad as it would be if it, like you said, stalled out there for a day or two.
Right. Yeah, it wouldn't be like Hurricane Florence a couple of years ago in North Carolina or Harvey in Houston back in 2017, where the hurricane literally just sat over the same area for 3 or 4 days. That's not going to happen with this. So the flooding will be more temporary. It won't be long term. But like you said, don't want to downplay it too much, because even if it hits as a Cat 2, it's at least for a while, it's certainly going to be a concern, and it's going to be at least a major deal for a short period of time. So certainly got to keep our eye on this one. And this is it's the 9th hurricane of the season so far. It's the 25th named storms. Named storms include hurricanes and tropical storms. So it's been a busy season. This is the strongest Greek letter hurricane on record. So it's been a pretty active or busy season, as we say. And it was expected to be.
Yeah, it definitely has been. Thank you very much, Nick. We'll check in with you later in the broadcast for other weather news. Thank you.
You bet.
Excellent.
But let's talk about the economy. I always like talking to the economy with our lead economist here, Anthony Smith.
Anthony Smith in the house.
What have been the most notable releases over the last few days?
Hi, Kevin. So in the most recent report that we have here for the economy, I'm going to go over something that we usually skip over a little bit, and that is the ISM, but on the services side. Usually we talk about the manufacturing index, but we're going to look at quickly the non-manufacturing index, so looking more at the services side. So this is going to pertain to things more like hospitality, restaurants, banking, finance, things like that, hospital, medical centers, things like that. So we're looking at that increase on a month-to-month basis throughout September. So now in this, I believe the 57 percentage point range. So well above that 50 threshold, signaling that there is expansion within the services side of the economy. So this is very important because, of course, services drive a lot of what's going on within the U.S. economy and economic growth within the U.S. The other big part that's really standing out for me right now within the ISM non-manufacturing index is that employment section of the index. And so that employment component just turned positive for the first time in 7 months. And so this is a pretty significant point for the ISM non-manufacturing index, and definitely a bigger talking point to overall employment and that recovery effort within the U.S.
And on that front as well, we had relatively good news on the unemployment number for August or September. I'm sorry.
That's right, Kevin. We had an unemployment level at 7.9%. So this is a pandemic low, and I believe the 5th consecutive month of decline for that unemployment number. So definitely great news. We're looking at overall recovery, of course. Not as fast as most would like to see, but a movement in the right direction. We saw that there was around or just over 660,000 jobs added in September. So definitely some significant growth there. I believe the pre-pandemic number was somewhere around that 700,000 mark. So on our way for sure. Of course, when we look at this again, leisure, hospitality, bars and restaurants really helped drive some of that gain. I think attributing over 200,000, around 200,000 jobs within the U.S. for September. Manufacturing added around 66,000 jobs throughout September, and so that's definitely more than halfway through where we were pre-pandemic, and definitely a sign of some recovery. Again, not quite there. Still, when we're looking at this recession and unemployment levels below where we were during the Great Recession, but movement in the right direction nonetheless.
Yeah, that's good news. So I would imagine that you're feeling a little bullish about the upcoming holiday season?
I think the holiday season is definitely one of the areas I'm going to be watching closely. I mentioned this a few weeks back with Zach Strickland on FreightWaves podcast, that really looking to see how consumers are going to react with these e-commerce holidays coming up, especially when we're looking at Amazon Prime Day and how many other outlets really kind of try to mimic that I guess you could say that format of really driving e-commerce sales. And so looking at Amazon Prime Day, of course, Best Buy, Walmart, all these other major retailers are going to be active within these e-commerce holidays. So really looking to see how October gets impacted by these consumer activities. Of course, we're looking at consumer trends, consumer sentiment, and consumer confidence on both measures from the Conference Board and University of Michigan. Both had increases, so showing that consumer confidence did increase and rose pretty significantly throughout September due to lower COVID cases and more jobs opening up throughout the economy.
Yeah. So we had a recent article on FreightWaves.com about Amazon Prime Days and how this could lead to a 75-day peak period.
Right.
Right. What are your thoughts on that, Anthony?
I think when we're looking at Amazon Prime Day, I think a lot of it's going to come down to what we're seeing what we've seen throughout the entire year, really, with managing some of that warehouse inventory levels. And I think that's really going to be impactful for this upcoming e-commerce holiday season, is how are these outlets going to really maneuver this whole warehousing situation within the supply chain. I think we're looking downstream, a lot more easier to move some of these goods, and I think that's really going to be the main driving point for a lot of these e-commerce outlets as we look at Amazon Prime Day. Of course, consumers been a bit more sluggish on that retail side since the expiration of those bonus jobless claims benefits, so there has been some deceleration. So this might be one of the final tick ups, or really kind of some of the drivers for consumer activity as we close out 2020.
That's interesting, and when looking at the ISM numbers from, the monthly manufacturing report that we covered last show, a lot of those indicators inside there would indicate that, the supply chain is really having a difficult time and being a little bit of a drag on this recovery, right, Kevin?
Yeah, definitely inventory levels and getting stocked at the stores, definitely. Well, thank you very much for those insights, Anthony, and we will talk to you next episode. Very good. So the market's really tight right now, right? Yep. OTRI is high. Class 8 new orders came out for the September numbers, a little bit above replacement level, and that's kind of one of those key indicators of capacity coming on.
Yeah, I mean, it was above October 2019.
It was, yeah. Strong numbers, about 30,000.
Yep.
Driver bonuses, driver pay. That's another leading indicator, and we're going to talk to Marilyn Surber from Tenstreet right now.
Excellent.
To see what she is seeing in the market. How are you doing today, Marilyn?
I'm doing great. How are you guys doing?
We're doing great. For those out there who aren't familiar with Tenstreet, please give us your elevator pitch.
All right. Well, Tenstreet is a driver management system that helps carriers and truck driving schools manage the life cycle of a driver. So at its core, we really connect drivers and carriers using our Driver Pulse app to help drivers and carriers make the hiring process better and less headaches for everyone.
Right. So you have a really good finger on the pulse of recruitment and retention trends right now. What are you seeing in the market?
So what we're seeing right now for application volume is down 15 to 20% from March still. Wow. So application volumes are still down. We do see the decrease is a little bit higher for student apps or inexperienced drivers than it is for experienced drivers, but still overall, we're still seeing that volume down.
So those are our applications to be a driver, not to the carriers, not to the schools.
No.
I see. Right. So the driving schools are pretty low on volume of potential candidates coming out, I would imagine, right?
Well, they're lower, not because of the demand, but they're lower because of the restraints on training.
Oh.
Mm-hmm. And that's really that's a bottleneck right now for new driver capacity coming into the market, right?
That's right. Kind of what we talked about, I think the last time I was on this program in May, we kind of talked about what would happen if no students were pushed into the market for months and months. What was that going to look like when all of a sudden carriers needed to start hiring in droves again? And that's exactly what we've seen happen over the last couple of months is we've seen that hiring pick back up. We've seen that demand for students go back up, but you can't really turn it off and on like that. But schools can't train as many students as they were able to train still because of the restrictions, because of COVID. There's also still licensing delays in some states, and so they're experiencing that with that ramped up volume. But then even on experienced drivers, there's just not as many. What we're seeing, there's not as many applying for jobs now as there were pre-COVID.
So what are you seeing from the carrier side, Marilyn? Are we looking at getting into another bidding war like we had a few years back?
It seems so. I mean, my times at a carrier, every year we would say, oh, it's recruiting crisis, whatever. And so here we are, what I would call recruiting crisis 2020. and it's just happening a little bit later in the year maybe than what we typically see that happening in, but it happens every year. Every year we go through this.
I know back in late 2017, early 2018, one of the key indicators were the sign-on bonuses. So the competition for drivers heated up so much. Are we about to see a replay of that because of the lack of new entrants coming into the market and just the demand for freight right now?
I think so. I think we are starting to see companies, Schneider announced a pay raise.
Mm-hmm.
We've seen companies announcing, different things around tuition reimbursement. I haven't seen a lot on sign-on bonuses yet, but I do think once you start seeing some announce things, then they all just start to come. So it'll definitely be interesting to see what the fourth quarter brings us, especially if the demand keeps up, as most are predicting that it will.
That's interesting. I mean, with the outbound tender rejects at 1 in 4, a little bit above 1 in 4
Mm-hmm.
on all modes, and in refrigerated 1
and 2,
1 and 2 almost, right? Really close to 1 and 2.5. And you have markets that are higher than that. You've got some markets that are at like 56%, 58% of this being free. You would imagine that these carriers are just going crazy trying to get these drivers, right? Is there anything to the fact that it's been going for so long at this type of level of lack of capacity that it is kind of lessened? I mean, is it kind of like, I hate to say it, but the new normal a little bit, and it'll lessen that bidding war a little bit because everybody's kind of used to the fact that, hey, we're making $4 a mile, but I'm only picking up half your loads?
Yeah, I would say there's a little bit of desensitivity, to that urgency because of exactly what you've talked about. But I do think that because this year has been so unique, it adds a different flair to everything that's going on. And I think people are not making decisions the same way that they were before this. And so I think it's really hard to predict what's going to happen because we've never been in this situation before.
Yeah, and there's a fact that, like we were talking to Zach earlier before this about contracted rates coming up next year, right? We're in the traditional contract bidding cycle, and the events in the two different sides of the market that occurred so close together in 2020 or in 2020, where you couldn't even pay your drivers because the rates were so low. You couldn't even run your trucks with people parking their trucks, and now you can't fit freight on your truck because you're carrying so much cash for being paid to haul that truck around. There's a bit of that as well that desensitizes it, does it not? I mean, these carriers were going out of business, and it happened before when there was the bidding war and you started these bonuses and upping the driver pay, and then when the freight market started to come down, carriers went out of business as well, right? So there's that type of issue as well.
There is. And also, in order to raise driver pay or to offer sign-on bonuses, carriers have to be able to go to their customers and get more money. And that just takes time to do that and for you to see the trickle down and for that money to get into drivers' hands. And so likely that's what's happening now. I mean, as that all tightens and like you're talking about, loads are getting rejected. Well, that's what carriers need to go to their customers and say, hey, we need more. You have to pay more. If you want a driver to haul this load, you're going to have to pay more for it. And then when they can do that, then across the board, you'll start to see people will be able to start raising pay.
Yeah, that makes sense.
Yeah, I think we'll see that. On the experienced driver side, what are you seeing in terms of retention? I know during April, May, turnover dipped quite dramatically, but it's edging back up to historical norms. Is that what you're seeing with retention?
That is what we're seeing, and we're not. From what we can tell, the lack of application volume is not really because drivers aren't necessarily changing jobs. It's just there's not as many drivers applying for jobs, but turnover is going up, and we are starting to see seasonality too. It also starts to tick up naturally. Turnover does. Ironically, the closer we get to winter and the holidays, people start to think about, well, what do I want to do differently? And so again, it'll be interesting to see how 2020 treats that. But yes, it's definitely back up from where it was in March and April, and more kind of traditional what you would expect to see from carriers, going up, even we're getting back to that 100% mark in a lot of places.
Wow. So in regards to the schools and the training and the constraints that are there, is there any light at the end of that tunnel, or is it just this is the way it is for the future? Is there anybody going towards that faucet to turn that valve back on in any type of way?
I think there is a light of that tunnel at the end of that tunnel. I think Don Lefebvre has been on your program. I know that CVTA and NAFIS, they work really closely with FMCSA, and FMCSA has made some exceptions for different things that have relieved that a little bit. And so I think we'll see more of that, and we'll see some of those exemptions extended. But I think we're also in a new normal. I mean, if we think we're not having 6 guys in a truck with 1 instructor is probably a long way from happening again. And so as far as that goes, I mean, you talk about where does the money come from? I mean, a school can't just turn around and go get 5 more trucks and hire 5 more instructors. It's just as hard to hire an instructor as it is to hire a driver, So even for schools to build up that infrastructure to completely revamp their program, that process just takes time. So as we move into 2021, I do think we will see, especially your bigger schools, start to do that.
Wonderful start to see carriers actually have their own training programs within there.
Yeah. So it's cut down. I know the training schools are cut down. I might have missed it right there. Is it like 6 students to every instructor in the past? And what's that whittled down to now?
Most schools that I talk to are 2 to 1.
Okay, so that's a significant decrease in capacity of training new drivers, which will last at least for another 6 to 12 months. I would assume.
I don't see that being lifted anytime soon.
Well, very good. Well, thank you very much, Marilyn, for joining us today. Again,
You're
Marilyn
welcome.
Surber at Tenstreet. How does our audience reach out to learn more about Tenstreet and yourself?
You can go to tenstreet.com, or you can follow me on LinkedIn, Marilyn Surber, and I can get you in touch with the right person or help you in any way I can. Thanks for having me, guys.
Excellent, Marilyn. Thank you.
Thank you again, Marilyn. It's interesting. That's a data point I'm really looking at. I'm looking for the bonuses and the waterfall effect or the tag-along effect of everyone raising driver pay.
Yeah, absolutely.
And from what Marilyn just said, there's a huge bottleneck that still exists and is going to exist for the foreseeable future in training qualified new drivers. And that's going to have a huge effect on capacity and how long this bull market lasts.
Yeah, it certainly. Yeah, I don't disagree with that whatsoever.
I didn't think you
it's
would.
Amazing. I've learned my lesson. I don't disagree with Kevin Hill. I was going to say the Kevin Hill, but.
Nice.
So what's up? What's going on? What's up ahead, man?
So, man, tomorrow we have Put That Coffee Down with Michael Fulham from Reed TMS Logistics, and Dune and I are going to talk. It's bid season. Everyone's going back to their customers to get increases if you haven't been working with a shipper, you want to get in there and work with them. So we're going to talk about winning bids, bidding strategies.
Excellent.
Because oftentimes you do all these bids and you win nothing. So you wonder why you spent all this time doing this.
Yeah, and it's especially difficult for the newbies.
Yes.
Right. The new brokers, the new startups, and so on. I mean, you've got to be prepared to just take your lumps for a while and hang out there.
You get
try
an
to get it
Excel
done.
file with 300 lanes, and you're like, what do I do now?
I have access to 20,000 carriers. Okay.
Yeah. The Freightonomics,
Not
Thursday.
a selling point.
Well, let's talk about Thursday.
That's where I was going. Was Thursday.
Thursday. I want to get that out of the way before we got to Thursday.
Oh, you did? Okay, yeah. So Thursday, October 8th is our next virtual event. It's my package, and I need it now, Kevin.
Now.
Right now I need it. E-commerce has shaken up the last mile logistics like no one could have ever predicted. Certainly we didn't, but
I know,
it came like crazy, didn't it? More often than not, the most challenging part of any shipment, and I'm sure a lot of people in our audience know this, whether it's full truckload, flatbed, refrigerated, LTL, or parcel, is that last leg of the final mile. So last mile virtual event is this Thursday, October 8th. It's going to be tremendous. And I'll tell you what, I'm really looking forward to it. I can't wait to, hear keynote is Eric Caldwell, from XPO, which will be always good. It'll be a great, but a ton of other speakers that are going to be there. And when you think of last mile, you know, it's we likened it on another show, I guess, to almost a break bulk when you talk about maritime. You know, a lot of people, I can't define it, but I know it when I see it.
Yeah.
But last mile is incredibly important. It is difficult to be efficient at it. It's difficult to do it and make money and be a cost effective at it. Yet it's one of the most important parts of the supply chain, and becoming more and more important, because you've got to get this is now we're talking about you know, product on shelf or in the production facility.
Yes.
Right? It's moved across the world and it's here. Now you screw up the final mile, and you've got returns, you've got bad inventory, you don't have product on shelf, you're missing out on sales, and it's holiday season.
Yeah, I want to really learn about the trends of over the threshold, in-home delivery, and reverse as well.
Well, that's the one that I'm really interested in as well, is the reverse logistics, because it's like 4 times the amount of returns with e-commerce than brick and mortar purchases.
Yes.
So those return policies are the return logistics, the reverse logistics is huge, which starts right there at the final mile. And when it's e-commerce, now you're going to everybody's house to pick this stuff up.
You are, and how supply chains and you know, e-commerce and retailers have changed during this crisis, and what's going to be the really lasting effect. Let's check in on the weather again really quickly before we end the program with Nick Austin.
I agree. Let's do that.
What do we have, Nick?
Hey, well, just checking in again on Hurricane Delta, which will probably hit the Louisiana coast. Probably late Friday or early Saturday, it looks like. There's a little more time to get ready for this. And I was looking in Sonar Critical Events too at all of the forecast models, not just the National Hurricane Center, and all but one have it making landfall on the Louisiana coast right around that time frame. So they're all kind of in agreement right now. The shippers and carriers, they all need to get ready for this. The ports will probably start to close, at least some of them on the Gulf Coast. And at least for a while, it's going to be a mess. But at least, like we mentioned before, the flooding that's going to occur in the coastal areas, it's not going to last for days and days. It's going to be more of a short-term event. But it's a major hurricane now, and it could still make landfall as a Category 2 hurricane with winds up to 100 miles an hour. So we're definitely going to keep a close eye on this one over the next few days, and we'll continue to post updates on our website, our social media accounts, and of course on tv.freightwaves.com and the FreightWaves TV app, all the video updates as well. So just have to keep track of it day by day.
So Nick, are there any other developing storms out on a hurricane season? And we're at Delta. Is the next one going to be named Echo, or is that, I guess that's not Greek, that's military. You know, Echo, Foxtrot.
Right.
Yeah. I'm not sure. What's E in Greek?
Epsilon.
Epsilon, that's right.
Right, but right now there's nothing else developing, especially nothing that's anywhere near the United States. So the focus right now is on Delta. So, but if another named storm does develop, it'll be named Epsilon. That's the next one on the list.
What if there's 2? What was F in Greek? Do you know that?
Oh, 2 more develop? Zeta, I think, is after Epsilon. If I remember correctly. Zeta, I believe.
Zeta, okay.
Alpha, beta, gamma, delta, epsilon, zeta. Yeah.
There you go.
Trying to remember from my fraternity days, you know, the order of the Greek alphabet. I had to memorize it.
I always wondered why they didn't just keep naming the storms, just go around the alphabet and keep naming the storms. Why did they even go to the Greek alphabet? I don't know.
I don't know. Well, thank you very much for the forecast, Nick.
Right.
And we'll keep an eye on the hurricane.
All right.
Nice. Wow. Yeah. So hey, yesterday on What the Truck, we had Brian Kempesty, the founder of PortX Logistics, which was a really interesting talk. And we talked to Dan, who is a driver at Row Transportation, as well as Jose Sacaro, who's transportation supervisor at Central States Manufacturing, who then hit me up after the show on LinkedIn and said, hey, wow, I got a ton of business calls after the show and everything like that. So it was excellent to have that, which was pretty awesome. Cool. But if you missed that show or any other show, you can find all the FreightWaves shows on demand on TV, on FreightWaves TV app, or on your favorite podcast player, or subscribe to Freightcasts and get every single FreightWaves podcast all in one feed. That feed is also the exclusive audio home to the Midday Market update, which is this one right here, Kevin.
It is. It is this one. So go to FreightWaves.com if you aren't a newsletter subscriber and do it now, and we're wrapping up.
Peace and love.